This is our Forex blog for September 6, 2012, and like we do most days, we want to start with our currency meter. This shows statistically which currencies are the strongest and weakest. The histogram on top is made up of multiple different tools. Some of them show the direction that the yen's going versus all the other pairs on the bottom, and other ones use the intensity. And anytime the yen's going down, against 75 to 100% of other pairs and doing so with incredible intensity, it's going to be at or above the dotted 80 level. So you can see it was extremely weak all day. The 15-minute trend was down, the hourly trend was down, and the daily trend was down. The weekly and monthly trend started off okay and got really light, just slightly up, and then after 8, all time frame trends pretty much were down. You can sort this currency meter, and I've recently switched my own trading to go back to using 5-minute bars versus range bars. The results are still the same, but it gives you a better feel for how long a trend's been going up or down. So for example, you can see here about an hour of weakness, about 20 minutes of just mild strength, another 2 hours of weakness, 15 minutes, 20 minutes of strength, 40 minutes of weakness, and so on. With the range bars, there's no sense of time because range bar is basically 5-6 pips per bar, whatever you set it to. If the market's very active, you could have one of those bars in a second after a news announcement, or it could take 2 hours to move 5 pips during the deadest of time. So this kind of gives a little bit better feel. Again, you can also sort these to see the strongest ones on the top, weakest on the bottom, and that's the first step of our easy Forex trading system. Look to buy the strongest currencies versus the weakest. Now today the New Zealand right now is the strongest, and it was strong for most of the day. However, the weekly and monthly trend of this thing was down. The Australian also strong, and the pound at times was strong, and the weekly and monthly trend of this one was actually up. You can trade in real time just with whatever's the strongest versus the weakest. There's no doubt that the yen was the weakest, and after 10, the dollar was the second weakest for the most part. So you want to buy the New Zealand yen, the New Zealand dollar, the Australian yen, CAD dollar, or you want to sell the dollar CAD, you want to buy the CAD yen, and so forth. So let's look at the New Zealand yen first. Again, this was one of the strongest ones, and as you can see, first of all, the point of control of yesterday is right here, so price is above that. This is the upper value here of yesterday, and price is above that. This is where price spent about 68% of the time yesterday. Yesterday was a very low volatility, low range day, and therefore that's why the volume profile is such a tiny area. One thing to keep in mind and be aware of is this is the point of control of last week. This is an area of major resistance normally, and today was so strong it shot right through there. But we are underneath last week's point of control, which does have a downward effect on prices. But at some point, the price in the downtrend stops, and then you have a resumption, a new trend, basically. So there's a lot of different ways of trading this. Once you spot the extreme strength, you can just use our intelligent trailing stops to get in and out. You would have had a small loss there, in here, small win, in here at 95, out at 17. Or you can use our displaced moving average as well. This is using our new digital signal processing based technology. It's much faster than a regular moving average or an exponential moving average. And by using a 5 period, it makes it even faster. Shifting it 2 bars to the right, once you see an uptrend, basically you would have got long here and out, in here, out, small profit, in here, small profit, and again here, 10 pip profit, in here, out, 30 pip profit. And so that's the New Zealand yen. Let's take a look at the Australian yen, since I have it up here. This one also, pretty much trended up all day. It was also above yesterday's point of control. And when it went above yesterday's high and retested that, that's a very big sign that you're going to have a big move up. Anytime a major resistance area gets broken, it comes down and does a retest there. It can't get back inside it. It's a great place to start looking for buys. And you can see it went from around 80.25 all the way up to, that went up about 50 pips. This is a decent enough pullback. When you see a big strong trend like this and it's up near our upper containment band, don't buy right up near the highs. Wait for a little bit deeper pullback. This is a much more high probability trade. You can see it kind of failed here. There was significant weakness at that point, and you don't know if it's going to go higher or not because, again, the weekly and monthly trend are down. So, at this point, it's safe to assume that it's going to come down and pull back at least 38% of this up move, but it doesn't. And it went sideways there for about 40 minutes. And when it finally breaks out of this high, it went up here again, usually double tops to the end of the move. When it comes up again and it doesn't reverse, that's a very big sign. And this is your next profit target up here at around 81. You would have bought this at around 70. That's a nice 30 pip profit. It actually shot through this and hit my Fibonacci retracement area, and I would have probably got out of that trade and not bought up here. When you're above the upper containment band, typically price reverts. So it's always risky to buy up there. And when it's above the upper containment band, I think I have the regular one on here. I'm actually trading myself with the digital signal processing based one, so I'll put that on there just so you can see. It tends to shift this up significantly. Let's move that up. Here we go. So you can see it did move it up, a certain number of pips. When it's above that area, most times you can look for counter trend trades, and I oftentimes myself scale into trades above that. I did today in the pound yen, and I have a way of trading and getting in incrementally larger and larger that yanks my average price up, and then based on the intensity of the move down, I tend to get out. I don't teach that because in the hands of the wrong person you could wipe your account out very easily, and I almost lost today in my trade. I was way early in getting in the pound yen trade. But nonetheless, above these upper bands, one thing I kind of look for is, when it goes up there and goes sideways and breaks, you go short. Up here again, short here. Let's say you got short, and we'll round out at 17. Got it all the way down to 04. Yeah, it's an easy way to pick up 10 pips when the market's extended. And I wouldn't have bought this pullback, although I wouldn't blame anyone for doing so because it's right at the upper band, and it did penetrate the upper band once, twice, and it may not be topped out yet. So if this goes sideways here for a while, this is a trade you could take. You can analyze the result of this later. People always ask me to point out more live trades, so this is the live market right now. It's above the upper band. The longer-term trend, monthly trend, is still down. I would expect some kind of a pullback before it would possibly continue up. And just from today's low to here, a 38% pullback is a decent area. So if you round up to 90 and you short this at 20, you have a 30 pip potential profit while risking only 10 pips. You put your stop maybe at 30, 31, 32, and you'd lose a small amount if you're wrong. And a lot of times if you do these kind of counter trend trades and you want, and let's say it does go against you and you lose, draw your fibs from here to here, wherever that fib target is up there, probably around 81, 55 to 60. That would be the next area you could get in. And in my experience, if a market's up too much and it doesn't pull back, usually the next fib target up, you can trade a little bit larger. Let's say you lost $100 on this trade and you did one lot. You could do 1.5 lot on the next trade, and usually you're going to get 20, 30 pips. So you make $300 to $450 minus your $100. You left with a nice profit, And so you shouldn't really feel any anxiety in taking a trade. If you have a losing trade, get out, have the smallest loss possible. And there's a lot of things you can do to get your loss back. One is just simply wait. You could, once you know where your fib target is, draw a regular line at that. Let's say this 81 area is your fib target right here. You could put a few pips underneath there and say create an alert. And you could say, sell odd yen. And you could put your cell phone address in there. And you could get a cell phone alert when the next fib target gets hit. And you don't have to sit there and wait and watch for the market. Just, during times where I'm trading live, I'm watching it. Typically, I read news when I'm in a trade, or, I'll look at the chart every 5 minutes or so. But, if I'm not there, but there's a price area I want to get into a trade at, I'll set an alert and just wait for them to get an alert. Typically, when the markets are as strong as they are at these extremes, when you get the alert and you sit down at your computer maybe a minute later, I get the alerts 4 to 5 seconds after they trigger on my cell phone. However, you might be in another room. You might not even be in front of a computer. You might have to turn your computer on. 1 minute's not that long of a time, really. A minute later, oftentimes, probably more than half the time, the price is at a higher and more advantageous place to get into a trade at than what my alert was. I tend to put my alert a few pips underneath the level, and when I get to the computer a minute later, it's at my level. More times than not. Occasionally, maybe 1/3, 20% of the time, I will miss the trade completely, and that sucks. But when these levels get hit, sometimes there's major selling there, and it falls 20 pips in less than a minute, and you miss the trade. So that this, you can always put a limit order out there to sell, or a stop limit, or whatever, to catch those type of trades. So let's look at some of the other ones. The euro was strong later in the day, and the weekly and monthly trend was up. So you certainly could look to have bought the euro yen, probably starting a little bit after 10. So here's 10 o'clock. Let's put the displaced moving average on this. Five period, shifted 2 to the right. I like to make it white so it stands out on the black background, and select digital signal processing. It's much faster. Now, just so you can see the difference, if I take that digital signal processing off, notice how the moving average slows down dramatically. I mean, actually not so much so in this case. Usually on a longer time frame moving average, it tends to. It just hugs price much faster, as you can see. And, a pip or two better entry price over hundreds of trades is a huge difference in your profitability. And I like the fact that it's super fast moving average. You're in this trade right here, and it really kept you in until once it gets way above the upper band. And again, I haven't adjusted my blog video. I tend to spend a lot of time updating and tweaking the workspace I trade with. Not too much time updating the blog video that I leave running. But when you select digital signal processing base moving average, it does shift up our containment bands as well, as you'll notice. Watch. This area right here is right at that level. And the faster the market is moving every hour, the digital signal processing base one moves up faster, and so the upper bands are usually 5 to sometimes 20 pips farther away. And when they hit those levels, this is where I like to really look to do counter trend trades. Even though it was super strong, notice when this area got hit here at 54, pulled back to 27. Again, it's right here. You wait for the first red bar, and then 1 pip underneath there, 59, pulled all the way back down to 14. These are huge counter trend trades. And usually after a big move like that, I'll kind of wait and see. I won't buy the first time over, but if it comes up, comes down, doesn't break the low here, I would buy here and here. The market really didn't go higher, so I'm kind of waiting for a deeper pullback. I might have taken that trade. I wouldn't have taken that one. I would have taken this one. And you can always use our real-time tools. When you see a move up with incredible intensity and the pullback has almost no weakness, that is usually a sign that the trend's going to go up. And I always draw my fibs off the last wave to get an idea of where my profit target is. If it stalls right here, which in this case it did, I would have got out of the whole trade because it's right at the green band here. I would have been out of the whole thing at 62, and this around 34, and I would have missed the remaining 15 pips, because it was a low odds of continuing up. But today it was, the yen was so weak that most of the trends continued. The CAD also very strong throughout the day until maybe around 11 and started to weaken off. The monthly trend shifted up, or actually was up. The weekly trend shifted up at 8. So let's take a look at buying the CAD yen. Here's 8 o'clock right here, and just exploded up. Nice little pullback. I typically won't buy the first pullback. I'll kind of wait and see, give it a time to pull back lower. If it doesn't, usually, it's going to go up again. You buy right here, you draw your fibs off the first wave, and, that's somewhere between the first and second fib target is usually where it stops its move. Probably 50 to 60% of the time it stops at the first one. Actually up to about 70% of the time, depending on the day. And usually 80% of the time, the 1.618 is the maximum. And if it's above our upper containment bands, it tends to be even more likely. Most days, our bands contain price. If the previous day didn't move that much, the bands in the moving average can be kind of more flat, and it's more likely to be broken. If the moving average is shifting upwards, it's sloping upwards or downwards, then the bands tend to be farther away, and they're even higher probability of containing price.